Hey, what's up, folks? Now, as we start to close out the year here, obviously you guys have seen us tail off on our acquisitions with the interest rates going up. And I get it. Not everybody wants to keep getting into the game, even though I don't see why you wouldn't, because if you're not in the game, inflation is going to kill you at almost double digits. So I still think you have to do something. But for some of you guys who haven't gone through the syndication e-course or don't have anybody around you that's accredited that kind of will tell you otherwise, that you really got to get moving, I would really urge you to at least just do infinite banking. A great way to punt the football forward, as we say, to maybe late 2023, maybe 2024, when the interest rates should come back down. And we're probably going to start to see happening is unemployment come up so that the Fed can ease off those interest rates hikes, and hopefully we can get back to normal, and maybe we'll get back to doing more apartment acquisitions here. But for now, what is something that you should be doing out there? And one of those things would be setting up your infinite banking. You're buying life insurance, you're double dipping in two places, and with some people opting not to invest these days, at least you make 5%. But a lot of questions have come in about, with interest rates going up, how does that impact the interest rates that you're getting with the life insurance? And it's good news here. The rising interest rates is good for life insurance because our yields go up because the life insurance yields go up. Some of you guys have been seeing, or at least I've been seeing, some of those rewards checking accounts, or the savings accounts rates, they're up to 2% from 0% maybe a year or two ago. The reason why they're doing it is because the interest rates have gone up, and also going up with that rising tide is the interest rates that these life insurance companies will give us. So of course they're making more money, but that's good, right? Because they're going to pass some of those to clients such as ours. And this is not a place to make a whole bunch of money. This is a place to store your wealth, to take a cash value loan from yourself and to go invest it in real estate or some other ideas, even buying a house to live in, flowing your money through here, especially for you high income earners going in excess of that jumbo loan size. Now, I don't know what's great is going to happen, but again, I'm predicting things that kind of get back to in 2023. And here on this right side, we have a graph here of how aggressive this last push up has been. And that's exactly what the Fed's supposed to be doing, right? Normalizing the highs and the lows, using interest rates as their primary mechanism or their lever to keep things from getting too hot or too cold. Now, as I said before, acquisitions are low for us right now because I can't just make deals work. I'm wondering how some of these deals come across my desk and how people are going to able to syndicate it. I'm just not able to make it work with the interest rates that they're at. It's going to be good for the long term, but we always try and get into deals that cash flow from the start or getting out the gate, and it's just really hard for that to happen. Check out the kimono, first half of the kimono we release out to most people to give a market update on what's going on in much more detail. Reach out to team at Simple Passive Cashflow for that. Getting back to infinite banking, right? Great time to learn about it. Some of our investors are real detail oriented. They want to go through the entire e-course that we have for people for free. You can get access at that at simplepassivecashflow.com/bank. There's a little info page there. You put in your email address, and then that way you get a members portal set up, and you can go through the e-course there and go through it. Takes most people maybe 2 to 3 hours, so it's not super long, but I think it explains a lot of the questions, and it really shows how to exactly use this tactic that I've discovered that a lot of the wealthy people will do it. But of course, this is very different than what Dave Ramsey and all those guys condemn. The secret is really all like, how much is the commission structure? How's it split? We try and create it with the maximum amount of paid up additions and minimizing the insurance amount, which is for most life insurance practitioners, that's really counterintuitive to what they're thinking of. Think of it like a HELOC, right? Instead of a HELOC, it's a life insurance policy. And the good thing about that is with your home, but the thing that's backing the HELOC, it goes up and down, right? We're starting to see home prices come down a little bit. The life insurance just doesn't do that. It just keeps going up and up and up. But it's much more liquidity that you have. And for some of you guys who have a huge amount of home equity, couple hundred, few hundred, even $1 million plus a home equity, I would really suggest to move the equity from there over to an infinite banking type of setup over time, because the bad thing about the HELOC is it's hard to get. The interest rates are going to go skyrocketing on you and your home prices go up and down. But in tough times, they freeze those lines of credits Whereas that's where they can't freeze it because it's essentially your money. And this is where the saying, be your own bank or banking from yourself. You have this basically like a HELOC, but it's backed by your life insurance. The cash value continually climbs. And as you need the money, say if you need $100,000 to go into this deal or this deal, then what you're able to do is take a cash value loan from yourself and then maybe pay it back over the time. Or why pay it back, right? If you're making money somewhere else a lot higher, why not never pay these loans back? But the idea is maybe 10, 20, 30 years down the road, going to be more in a cash position and using no debt at that point. And although we always theorize that why the heck would you want to do that? But if you could, this would be the place where you would replenish and pay back and just build your cash value out of this infinite banking. So if you guys want to learn more about this, go to SimplePassiveCashflow.com/bank. If you guys haven't completed the club form to get access to a lot of these and many other insider type of info pages, go to SimplePassiveCashflow.com/club and complete your onboarding call with myself there before the end of the year. And hopefully we'll see you guys at the annual retreat in January here in Hawaii. Bye.